Hello guys, today I want to introduce you a very simple and powerful strategy. We do not use indicators in this strategy. Please stay with me until the end. The Forex world is forever evolving, but that doesn't mean classic trading tools like chart patterns are irrelevant. The trick to adapting to Forex is learning how to identify these patterns and knowing what to do when you find them. In this guide, we're going to look at drop base rally, DBR, and rally base drop, RBD, patterns. These are useful formations that occur all the time, so it's a good idea to familiarize yourself with them. What is a drop base rally in Forex? The drop base rally is a chart pattern that forms when the market falls, enters a period of sideways price action, and finally shows an explosive move upwards. The story behind the pattern above goes something like this. After a large decline, the sell-off ultimately came to a stop, leaving bulls with the opportunity to buy at lower prices. However, the buying power at this stage was not enough to reverse the market. Instead, the market began moving sideways as neither buyers nor sellers could overcome the other party. Eventually the piece broke out of the range to the upside and the market rallied back to higher prices. We're going to show you how this pattern can serve as the foundation for various trading techniques. But first, let's take a look at the rally base drop. What is a rally base drop in Forex? The rally base drop is a similar chart pattern to DBR but with the opposite formation criteria. The RBD forms during a rapidly increasing market followed by a period of sideways price action, ending with a sharp drop. The narrative is the same except that everything is reversed. Enthusiastic buyers bid up the price, but once they ran out of steam, sellers slowly took over. Now that you know the fundamentals of DBR and RBD patterns, you might be wondering how to trade them. How to trade drop base rally and rally base drop patterns. One simple method to trading rally base drop and drop base rally patterns is to do so while they are forming. You may recall that the base part is a range on the smaller timeframes. You must also remember that a range breakout is a classic technical signal as it indicates a potential imbalance between supply and demand. Thus, when the price breaks out from the base part, you may open a trade in the direction of the breakout. The easiest way to do this is to switch to a lower time frame. This way, you can clearly see the range, wait for a candlestick to close above the upper, or below the lower, bound of the range, and open a trade. You can put your stop loss around the middle of the range and your profit target to the level where the pattern is regarded to be complete. Day trading strategy rules. One strategy consists of taking a long position after a drop-based rally pattern forms and the price returns to the rally's origin. Conversely, the other strategy takes a short position after a rally-based drop pattern forms and the price returns to the drop's origin. You bet on the possibility that the rally will continue in case of the drop-based rally and that the drop will continue in case of the rally-based drop. Since it's usually not smart to buy at the high, or sell at the low, you wait for a pullback to the base. The price has recently reversed in this area, so you can assume that it functions as a supply, or demand, zone. Thus, once the price gets to the zone, you can open a trade hoping for a quick bounce from the zone. The stop loss is placed on the other side of the base, that is, a few pips below the entry in case of the drop-based rally, and a few pips above the entry in case of the rally-based drop. The take profit is placed at 2x risk. So, if you risk 10 pips, your profit target will be at 20 pips. There's no break-even rule. Once a trade is opened, it's either going to be a win or a loss. Of course, you should risk only a small amount of your trading money per trade, ideally no more than 1%. Don't expect much from this strategy in terms of profitability at this stage. The purpose is to help you practice. If you like this trading technique, feel free to improve it or create your own strategy. I publish daily free analyses and free signals on the Telegram channel. If you like, you can become a member of the Telegram channel and use them. Please like the video and subscribe the channel. You can support me by recommending the channel to your friends and watching other videos of the channel. Good luck until the next tutorial.